Good morning, good afternoon and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine and today I'm joined by the CEO and Chairman of Sunrise Banks, David Reiling. Great to see you.
Elliott, fantastic to be with you today. Look forward to our conversation.
Me too. So look, before we get cracking, we're going to learn a little bit more about Sunrise Banks. So David, if I'm right in thinking, you're a regional community bank with financial inclusion and financial wellness at its core. In practice, how does that set you apart from, quote unquote, a normal bank?
Yeah, so Sunrise is its unique character, I would say. We are about a $2 billion bank, and we are a mission-driven bank. And so really the focus of Sunrise is going to be on both social impact as well as an environmental impact, as well as being a profitable, safe and sound bank. And so essentially what that means is we are a certified B Corp, if you're familiar with that. So think of a triple bottom line, stakeholder engagement. We are also in the US what's known as a Community Development Financial Institution, or CDFI, which is very much it's a designation by the US Treasury, so very much focused on the social aspect of banking. And just think of it as that the majority of our loans are to low and moderate income people each and every year. And we are also members of the Global Alliance for Banking on Values. And so I actually chair that alliance, and that's an alliance of what I would consider the slang of do-gooders and tree-hugger banks all over the world, 70 banks in the alliance. And we focus on the values of banking, really serving the real economy in the communities and people that need it the most.
Can you give us a sense of how many people your do-goodery and tree-hugging has helped and in what aspects, maybe?
Sure. So for Sunrise, maybe to frame it up a little bit, we have a twofold business model. So half of our business is what you might think of a traditional community bank, but really focused on the urban core of the city that we're headquartered in, which is Minneapolis, which is in Minnesota in the United States. And for those global listeners, Minnesota, middle of the United States, on top, just below Canada. So you might know it from George Floyd, Prince, all that good stuff. So that's where we're headquartered. So we do a lot of business in our local area in and of itself, a lot of lending there. The other half of our business is really digital. And so whether it's partnerships or joint ventures or collaborations or innovating schemes with fintechs of all kinds, that's the other part of our business. And so when we talk about impact and the people that we serve, well, our local area would be in the tens of thousands. And when we talk about our impact digitally, you're talking about impact for people that's in the tens of millions. And so that's really the difference that fintech brings in terms of scale. And so what does that mean? That means we help people get access to the financial services system, like a bank account for the first time through digital means. Help them stay out of higher cost, payday lending. Help them build savings, help them with financial education. And so digitally, we can do this on a national basis across the United States and partnering with different fintechs, and it works fantastic.
And just to be clear, you're not a charity. You are lending money on a commercial basis, albeit not at kind of, usurious interest rates in order to lend to people who perhaps otherwise wouldn't be able to get loans at a decent rate.
100%. Probably my life's legacy right there is saying that you can do well by doing good. And if you look at our financial performance over the past 10 years, we outperform banks in our class 8 out of the last 10 years.
Okay. And look, assuming they don't tip the economy into recession, of course, banks usually love higher interest rates because higher interest rates means higher interest rate margins, which means more profits. Since you're more focused on purpose over profits, or at least purpose and profits are of equal importance to you, are you now worried or kind of excited because it means that your bank will make more money and be able to do more good?
So yes, and I don't control interest rates. They are what they are. Obviously, it's difficult for an intermediary like a bank when interest rates are so low and the margin is compressed. In particular, my banking colleagues in Europe, where you have negative interest rates, that's just such a challenge to run a bank and an operation, and it does limit what you can do on the good side. And it also limits the investment that you can put in technology and other resources in which to scale good. And so the two are, I would say, are simpatico. They go together. You have to do well and do good. So the fact is running a bank that's safe and sound and profitable is very important. It's equally as important as really the impact measurements that we do. But really, we lead with impact in mission, because that's really our differentiating point in the marketplace. So when we think of fintech, we think of fintech for good.
Okay, so look, we've heard about Sunrise Banks. Let's now get to know David a little bit better. So, David, look, the financial crisis of 2008, I think, possibly led to a generation of people perceiving bankers as people who earn lots of money in exchange for doing pretty socially useless things, or at least in some cases. You would seem to embody the opposite of that. What was it that prompted you to go into banking and finance with the explicit purpose of helping people rather than self-enrichment, let's say?
Sure. Well, Elliott, I got a lot of stories, but the origin story, if you will, is I grew up in Minnesota, and I went to an all-boys Catholic military school for high school, so grades 9 through 12. And so I thought a career in the military is where I'd go. It just so happened that I had a cousin that went to the University of San Diego. And I got a tour of that university in the middle of February when it's just bitter cold in Minnesota. And she was attractive. The weather was fantastic. I could see the ocean, and I took a course turn of, I think I'm going to go to university here. So that as the base of where I'm at. When I was in college, I started a business. It was really the beginnings of my entrepreneurial spirit coming out, and really the identification that I'm really an entrepreneur. I just happen to own a bank at the moment. But the other aspect that really kind of solidified kind of this mission and do well, do good is, boy, back in those days, you could go to Tijuana, Mexico, or Ensenada, or Rosarita, in different places, and I learned to surf. And so I surfed all along that coast, which was phenomenal. But I also built homes and volunteered in Tijuana, Mexico, and so forth. And I had worked construction every summer growing up, except for one where I was a teller, and I loved being a teller. And so this great satisfaction that I got from helping people and building their homes, because I had this skill of construction, I'm like, how do I apply that in my future? And how do I apply it particularly to banking, because I really enjoyed being a teller. My career goes on in that I went to work after I sold the business that I started in college, went to work for a bank in Los Angeles. Bank robberies have a thing with me. When I was a teller, the bank I was in got robbed twice. The first 2 weeks that I was on the job as a trainee in Los Angeles, the bank I was in got robbed 3 times. I ended up working in South Central Los Angeles at the time, which was the bank robbery capital of the world, in addition to gangs and riots, Rodney King at the time. It was just, I worked in a very volatile community, if you will. And so my banking career grew up very quickly because I got a lot of responsibility, but I also learned how to bank in an urban setting with a lot of issues. And so that was really the foundation, I would say, for what was to come. And after the third time I had a gun to my head, I figured my luck was not going to persist. So I went to work for Citibank in downtown Los Angeles, had a great experience there, ended up buying a bank that was about to fail back in Minnesota, and really focused in on immigrant communities in Minnesota, and built Sunrise basically from a $14 million bank on a good day, which was, this bank was a train wreck, to what it is today, which is a little over $2 billion.
Wow. Anyone would think that having a gun put to your head a few times might put one off one's chosen career, but I guess, what doesn't kill you makes you stronger, perhaps literally in this sense. And when you're not, I mean, you mentioned surfing as being a passion of yours. When you're not, working with Sunrise, what are you doing to wind down in your downtime?
Yeah, so I'm an avid, I love to exercise. So whether I'm riding the bike, walking the dog, swimming, anything that I can do to be outside. But my real passion is travel. So wherever, whether it's travel for business or leisure, love travel. I just went over 50 countries. And so my big goal now is, how do I do the next 50 countries in half the time? And the easy countries are out of the way now. Now I got to be more mindful as to how to explore the world. Right.
I guess you'll be really doing the revenge traveling that we're seeing post-pandemic. Just one thing I didn't ask you, David, the business you had in university, was it something particularly interesting, or what was it you were doing?
It wasn't particularly interesting. It was very simple. It started off being a T-shirt business. And so I told you that I grew up, I went to school in the Catholic school system. So I was a relatively shy Minnesotan going to Southern California. And so anyway, starting this business of selling T-shirts was really to fraternities and sororities for different events that they had. And so it was really an interesting way for me to knock on a sorority door and introduce myself and say, I have T-shirts, as a way of ingratiating myself in the sorority and meeting some new folks. But so it was a very simple business model. Collected half of the money up front, which was the cost of the shirts, got the other half when we delivered them, and that was about it. And by the time we were done, we had not only T-shirts, but sweatshirts and hats and all sorts of sportswear, and corporate logo was just blossoming at the time. And so the business grew significantly. As a matter of fact, that business still exists as a division of another company today in San Diego. Okay.
Well, you are actually the third fintech founder that I've interviewed on this platform who started out life with a T-shirt business. We've had Jason Gardner at Marqeta, and the founder of Cantox, which is an FX fintech based in London, also started out with T-shirts. So there you go. Maybe that's a kind of entry-level business. But look, David, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Sunrise Bank's CEO and Chairman, David Reiling. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now David, let's talk about the future of finance. All right, so look, impact investing, environmental, social and governance focused investments, many investors these days, including massive ones like BlackRock, want to make a good return but have a positive and or sustainable impact, or at least they say they do. So how much of this is genuine, do you feel, and how much of this is just kind of jumping on the bandwagon to try to make themselves more appealing to investors?
Yeah, it's a great question. There's a tremendous amount of greenwashing that is out there. People saying, hey, we do this, and it is really pretty milquetoast. But you can look at the ESG world and you can say everything is ESG these days. And so I think where it really gets down in where you can separate kind of those who are doing it for, I'll say brand purposes or on the outside but not on the inside, is really when you look at the intention of the business. Is it a part of the business model in some way, shape or form to do good or to lower carbon emissions or something like that? And where the company is really taking on initiatives that are intentional and integrated into the business in which to do good. When you get to that level, you really have, I find, you have organizations and businesses that have a culture that's embedded in the people, into the products, into the systems that they have, into their vendors, their supply chain, in which they're doing good. And so that's really, I think, the place to look when you're doing your due diligence on companies. But I have to say that, when BlackRock comes out and says, we're not going to invest in somebody who doesn't have some social or environmental impact to it, that does move a market, and it does create change, and it does create conversation, and that's okay. That's really good. And so the movement of fund and the flow of funds, and capital particularly, is critical to then moving forward in these to a better society, to a better planet.
One of the most fascinating debates in this context, to my mind, is it good or bad to own, let's say, oil and gas companies? Because if you've got a massive investor like a BlackRock or whoever owning oil and gas companies, then you could argue that, hey, you're investing in companies that are harming the environment, that are contributing towards climate change. But at the same time, if they then divest of those investments and sell them to someone who is less or even has zero consideration for the environment, maybe they take it private, and then maybe they're not subject to the same kind of scrutiny as an oil and gas company owned by a major institutional investor, and they pollute even more. So what's the best way forward here? Because it does fascinate me that on the one hand you could, okay, fine, I'm not going to invest in any of this stuff, but then if you sell it to somebody else, they're going to do even more harm than you would if you had done it maybe responsibly or gradually wound down the investment in oil and gas and shifted investment to, wind or solar or what have you. So what is your perspective on this?
Yeah, so I mean, at some point in time, you do have to have the courage to disinvest. From a major corporation standpoint or a major financial institution, your big banks, if you will, and your investment houses. So at some point you got to get there, but you have to add the reality of where we are today and our dependence on this. We just can't turn it off because economies will collapse and so forth. And you're seeing obviously the troubles in Europe, particularly given the Russian and Ukraine situation. So that is making massive progress forward to hopefully moving off of fossil fuel based and into more renewable energy. And I think there's a combination of what can you do now and what can you do to take some bold steps. And so I get it. It's if you divest from something, it's likely to go somewhere else in the short term. Eventually, the biggest capital markets are going to dictate whether that industry survives or dies, because capital is the lifeblood of it. And so in that particular space, then there also needs to be investment in new and innovation. And it has to compete. It's got to compete better. It's got to be better, faster, and cheaper than the fossil fuel-based economy that we live in. And so we really have to kind of move in two directions in terms of the innovation front as well as the disinvestment front. And so we really need to push that through. Now, if I was to take a very practical and realistic approach to this, it's not until you have, it's not like we don't have significant events going on today. In the US alone, we had 20 weather events or climate events that were over $1 billion in impact. And still that's not quite moving the needle. It's when you're going to have massive issues is when I think you're going to find a point of the tipping point, if you will, in which to divest as well as to invest in that innovation at a big scale because the cost is just too much. And people can really see the dollar and cents, and it's impacting them. Because it's really hard to say, well, I recycle, I turn off my lights, I do all this, I'm doing my part in climate. The fact is you'll vote differently with your dollars as well as your political inclinations when your house is wiped off, right? You really get focused then.
Right, but I mean, obviously right now we're seeing, record inflation or inflation that's not been seen for decades. And so if you divest and you raise the cost of capital for companies that are, emitting, large amounts of carbon emissions, oil and gas companies, for example, then that's not going to help the current situation, is it? So I'm just wondering, it's very hard politically, especially, and also, I suppose, as an institution to be talking about that right now when people are struggling to, make a choice between eating or heating.
So I would agree. And so you mentioned the time frame. So the short term versus the long term. And so that's really the perspective. And I think that's a critical perspective when you think of all things, whether it's partnering with a fintech or whether it's climate. And that is what can you do in the short term versus what do you have to do in the long term? At some point in time, you're going to need to find replacements for fossil fuels that are at the same price or less. You're just going to have to get there. Not unless we're going to run out of oil, which it doesn't look like we're going to. We thought of that at one time as a possibility, but that doesn't seem to be the case. And so the fact is that we do need to move forward. And I understand that you've got there's a short-term pain for this. And it is pain. There are people who just can't afford their medicine because they need to put some fuel in the petrol in the tank. And so the fact is there's a hard trade-off in this, and there needs to be replacements for this. And, we need to get on with it already. We do need to find and invest in alternatives. And whether that's, solar, wind, whatever, renewables, whether it's safe or nuclear, we're going to have to find these alternatives and do it expeditiously.
Okay, Dave, just briefly, because I want to move on to the final section. You're not a fintech, but, you partner with many fintechs. How easy is it for legacy banks, traditional banks, or banks that are longer in the tooth to reinvent themselves for the digital world?
It's super hard. It is really challenging. I'll tell you, one of the most challenging things is there's two major ones that come to mind. The first is you have to change the technology stack that you have, which means you got to break what you have. You have to change it. So it means you have to drive this company forward. And while you're driving it forward, think of it as a car, you need to change the wheels while you're moving and still not crash into anything. And it's very challenging to do that. So the technology challenge conundrum is a big one, but that's possible. The other, I would have to say, is the board and management. So the board of directors of any particular bank, as well as the management, need to be capable in order to enter into fintech and do it safely and soundly, and they need the support of their board, and the board needs to understand why. But the fact is if you don't have that leadership and the courageousness to invest in the technology and the people and the systems to make it all happen, it does not happen. And that's what we're seeing in the US, particularly as we see the number of bank charters decline. You're seeing consolidations and mergers because of the investment that's needed to do it, as well as the management expertise in which to drive that forward. And I don't think it's particularly only a US thing, but that's so close to me that I see it day in and day out.
Sure. Okay, so look, David, it's time now for our round of rapid fire questions. Are you ready?
I am ready.
In that case, I've got my timer set, so you've got 90 seconds. Just one-word answers. We'll try and get through as many of these as possible before your time is up. So away we go. What financial segment, aside from yours, has the biggest potential over the next 5 years?
Oh, I see embedded finance as having a big future.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Moving our technology development faster.
Are we at the beginning, middle, or end of the fintech wave?
Middle.
Do you have a metaverse strategy?
No metaverse strategy.
Have EU and US regulations kept pace with changes in developments and behaviors in the financial industry?
No, but the regulators are more open to listen.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, a part of the future that we don't want to miss out on?
Interesting part of the future that I wish I knew more about.
Have you ever invested in crypto yourself?
Yes.
Are physical points of sales part of the future of finance?
They are.
On a scale of 1 to 10, 10 being the most likely, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10 years? Yeah, I'll go with that.
So that's like a 10 out of 10?
Yeah.
Okay. That central bank digital currencies will become a mainstream reality in the US and EU? Out of 10, the likelihood?
Time frame?
No. Out of 10. Like 1 to 10, 10 being the most likely.
They will. It'll take time.
Did you say 10?
10 out of 10.
Thank you. All right. Well, we ran out of time while we were re-explaining the rules there. But David, we're out of time for the rapid fire round and also for the interview, I'm afraid. But really enjoyed our conversation. So just want to thank you, Sunrise Bank's CEO and Chairman, David Reiling, for joining me today. Thank you so much.
Thanks, Elliott. Great to be with you.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can subscribe to the Paris Fintech Forum YouTube channel. And of course, don't forget to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.